Hey, Lenore here, and I'm going to explain a little bit about the statement of cash flows. So that's our latest chapter. The statement of cash flows describes what has occurred in the cash account into three different categories we break cash activity into: operating activity, investing activity, and financing activity. Operating activity is the daily cash or weekly or monthly cash that the company has spent on operating. Uh, that would be accounts receivable and accounts payable. Investing activity, that's what the company has actually invested into the company. Was it long-term investments? Was it some new equipment, new machinery? Financing activity is how the company has financed their operations. Did they borrow money or did they issue stock? So we can go directly into the detail now. We will be creating the statement of cash flows using the indirect method. The indirect method begins with net income. So there you can see net income. We add depreciation expense, and the reason we add that is we want to get to a net income that is solely based on cash. So the depreciation expense, that entry is a debit to depreciation expense and a credit to accumulated depreciation. There isn't any cash involved, so we need to neutralize the effect on net income. Here, as I mentioned earlier, we're going to show the change in current assets, excluding cash, and the change in current liabilities. So think of your accounts receivable, prepaid insurance, inventory, accounts payable, wages payable. All that activity on the balance sheet that's current will appear on the operating. And gains or losses on the disposal of long-term assets, that too will appear in this section. Let's move on to the investing activity. Once again, this is long-term assets, all changes in activity in long-term assets. That includes purchasing long-term investments or perhaps selling long-term investments. So if you're selling long-term investment, long-term property, or long-term intangible assets, you will show the cash proceeds in this area. If we purchase long-term property, plant, or equipment, or if we purchase long-term intangible assets like patents, all that activity will be here. So to sum it up, this is long-term assets. Under the financing activity, we will show long-term liabilities. That could be borrowing or repaying long-term liabilities like notes payable, loans payable, mortgages payable, things like that. And we'll show in this section whether we have issued preferred stock or common stock and whether or not we purchased treasury stock. The last item is always cash dividends paid. So stock dividends don't appear here because they don't involve cash. Once we have all these items listed, we're going to then go back through and calculate net operating activity by starting with net income, adding depreciation, and then the changes for all the current assets and current liabilities. We're going to net all the investing activity and then net all the financing activity. So here's what we do at the very end. After we've net all that activity, operating, which is number 1, investing, which is number 2, and financing, which is number 3, we're going to net those together or add them together, and that will determine the net cash activity. Now here's the good thing about the statement of cash flows. We know the answer before we begin this statement. So net cash activity should equal the change from one year to the next in the cash account. So if the cash account has increased $10,000, then each of these net operating, investing, and financing must equal an increase of $10,000. Once we're done there, we then add the cash beginning balance, and that will equal the cash ending balance on the balance sheet. So I will create some new pods and talk to you soon. Lenore out.